Good morning, everyone, and welcome to our financial wellness webinar. My name is Karen Mitchell-Moore, and I'm the head of healthcare. Money for many is a source of conflict, stress, and secrecy, actually. And I'm sure you and many others have heard of things like, well, how do I even start to save? I don't have enough money. I live from paycheck to paycheck. And of course, I don't even know where the money goes, but I desperately need some help. So today we are joined by Stian de Witt, who's our Executive Head of Financial Planning. And Stian is going to share with us some valuable expert advice on how we can make meaningful changes to our lives so that we can live day to day in peace and just get a sense of financial wellness for our future. Without further ado, I'd like to hand you over to Stian. But just one more thing. If possible, if you have any questions, please can you put your questions in the Q&A? And as soon as we finish the webinar, we will then answer those. Thank you very much, and over to Stian.
Thank you, Karen. Morning, everyone. Yeah, budgeting is sometimes a very, very sensitive topic. My brother-in-law once said that my sister, which he's married to, her credit card doesn't have a limit, it only has a target. And sometimes people have their budgets in the same way, where they say, I don't want to have a budget because I don't want to be limited in any way, shape or form. But an interesting thing, in 2008, when we hit the subprime crisis, a very prominent company asked me to assist their staff with some seminars about how to get through the whole crisis. And I actually did seminars for most of the staff, about a 800 staff complement company. And every single person that attended the webinar, or the seminars at that stage, they weren't webinars, bar one couple that had financial difficulty, there was one thing in common, except that one couple. None of them had a budget. So I know sometimes we feel budget is a very restrictive term, but it's not to restrict us, but actually to give us some boundaries so that we can move forward on it. Now, yeah, so wealth and wellness, it's something that's very important for us to grow older with vitality and with purpose. Just a bit of a comment there. Now, the one thing a lot of people say, no, but if I have more money, my life's going to be better and easier and so forth. But we've actually seen the opposite. Money is something that amplifies character. So it's never a tool, or it's a tool in your life. It's not the master of your life. It's something that you can use to extend who you are as an individual. And I think that's very important to note, that a lot of times there's a saying that goes, it's actually a Bible scripture that says, a lot of people say money is the root of all evil, but it's actually not the case. It's the love of money that's the root of all evil. So it's not how much money you have that's the problem. It's how much money has you that's the problem. I think it's very important to lay that foundation before we go into the nitty-gritties of budgeting, to understand that almost the spirit behind money is money is something for us to be an extension of who we are in order to bless other people and make our lives and the lives of other people a lot more meaningful. Now, also money is a seed in our lives. Now, the one thing that's very important is that if you do not use your money and what you have as seed to invest in other people's lives and into the lives of other people, money dissolves very quickly. Now, if we use money and say it's a seed for something I want to have, let's use an example. I want to extend my studies, so I'm going to use money as a seed to go and purchase a enrollment at a university or a college or something. So I use my money as a seed for something I get. If I use money to invest into my retirement, it's a seed towards my retirement. If I throw my money towards the things like houses and or cars and perishables, that seed will bear very little harvest and fruit in our life. So the question is, what am I doing with my money? Now, with that in mind, let's get into some details. And a lot of people come to me and say, Stian, now, I don't have a budget. What do I do? How do I actually get to a budget? Now, the first thing that you can do is what we always say to people. What we do is we take 3 months bank statements and then we evaluate that 3 months bank statements to give us a baseline. Now, about a year and a half ago, I had an interesting conversation with a client, and they came to me. Both of them are very senior earners, and they said, "But we don't know why, but we're not getting through the month. There's more month left at the end of the money than the other way around." And we have a system where we take bank statements, we throw it into an AI tool, and it actually then gives us your bank statement. From your bank statement, a budget is created. And that's the one thing that was very interesting. They were spending on average 5,000 Rand a month on biltong. When they saw the numbers, they didn't realize it was actually so high. But when we started analyzing it, it was actually the truth. So yes, it is sometimes very scary, but it's to give us a baseline. It's almost like if you know there's something wrong with your health, what's the first thing you do? You go to the doctor and they run a couple of tests to give you a baseline of where you're at. Because if you don't know where you're at, you don't know where to go from there and what to do about it, what interventions to run. So your bank statements or your spending habit is actually your baseline to know where you have to work from. And yes, it is sometimes scary, but like when you go to a doctor and he says, I have high blood pressure, or the other day we sat with someone and we've seen this a few times where we do financial planning and this person wants to increase their life insurance and they go for tests and they really don't want to go for the test. But then they go for the test and the next moment they realized, you know what, there's a major challenge. One case, I can mention this, we had a client, went for medical tests, and she realized when they got the test, they realized she has breast cancer. They were able to very quickly stop that breast cancer and contain the disease, and actually she's still alive. And that is just one example of how, if you have a budget, you can actually save your financial life. Now, the next thing then to do is you categorize it. And in categorizing, we say there are 3 types of categories in your budget. You have your obligations, you have your needs, and you have your wants. Now, what is an obligation? Like you see examples, rent, bond, debt repayments. It's something that if you do not do it, the repercussions would be vast. Let's use an example. You don't pay your rent or you don't pay your bond. The bank or the landlord is going to come and say, sorry, you're out. We're kicking you out. If you have, let's say you have a car, which is under hire purchase, a loan with a bank, that agreement says you must insure your car. It is a requirement, a contractual requirement. You must do it. If you don't pay your debt, you're going to be in trouble. Their needs are things like groceries in a way. Groceries sometimes is a bit of an obligation, so there's a bit of a grey line between the two. Utilities also, but something like a very good example would be clothing. Clothing, you don't have to go and buy your clothes every month, but at some stage you'll have to do it. Healthcare in South Africa, in a way, some of it is a need, but most of it is an obligation because we don't want to end up at a Steve Biko facility or a public health facility if we can prevent that in the South African context. And then once that's the stuff like your 5,000 Rand biltong, going out for entertainment, dining out, your DSTV. It's something you want to do it to enhance your life a little bit, but you really don't have to do it. So step 1 is once you have your budget categorized, then you go and say, what's my obligation, needs, and wants? Now, just on this point, one of the biggest mistakes people make, they go and take a want and they make it an obligation. Now, what is that? How do I explain that? A good example is you go and buy a fancy car, you go and buy a boat. A boat is not something you really need in your life, or it won't break the bank if you don't have a boat. But if you go and you say you go and take that boat and you take out a loan at the bank to fund that loan, that want becomes an obligation because you must every month pay that premium unless you get to a place where you say, I'm going to sell the boat, or you've paid it off. Okay, so just keep in mind that you don't go and create an obligation out of a want. Right, then there's a great book by a small, I call it like a three, 4 times going to the toilet book by a guy. There's a book called The Richest Man in Babylon. Very thin book, very great book to read. He says you must actually live off about 70% of your income. Now, ideal, you want to give about 10% of your money away. Now, interesting thing is, regardless of which religion you're in or if you are religious or not, most religions, but also people like Susie Orman, Robert Kiyosaki, that wrote Rich Dad, Poor Dad, a lot of individuals say, and if you go and look at a lot of people, they say, you must have an open hand. It's important to give some money away. It just creates that psychology of abundance in your life, and that you're not hoarding everything. Because again, money it's not how much money you have that's a problem, it's how much money has you that's a problem. The next thing is at least 10% of your money you must save up. Now we'll expand a little bit on that a little bit later. And then 10% of your money needs to go towards debt. Now, if you don't have any debt, then you take that 10%, you make it 20% on savings. So ideally, you do not want to live on more than 70% of your income as your living expenses. Now, let's quickly talk about that first 10%. Now, we call it an emergency fund or an insurance fund. 10% of your money you put away into a fund for unforeseen circumstances. And by the way, that's a really good tool to ensure that you don't go into too many marital arguments. What I mean with that, I remember when I just got married, I had an emergency fund, and then I started a business, and I took my whole emergency fund and I dumped it into the business. And it took me a few years to recover and replenish that emergency fund. Now, in that time, we had a breakdown on a washing machine. Now, if you have a breakdown in a washing machine and you don't have an emergency fund and you're literally on the margin and there's no additional margin in your budget, then it is a very stressful conversation to have with your spouse, because what we're going to do now. Now, the insurance and emergency fund that we use is something that can actually help you, that if something like that happens, you have money to go and grab a bit of a cash flow out of that system and put it into that unforeseen circumstance and expense that you've just incurred. Now, what's very important in this scenario as well is how much do you need to have? Now, I always say to people, get to at least 10 to 15,000 Rand in an emergency fund, but ideally, over time, you want to expand it to 3 to 6 months worth of expenses, not income, expenses that you have in your budget. Why is that important? In COVID, when people went into lockdown and a lot of people, some people lost their jobs, other people had to go on short pay and things like that. Every single client of ours that had an emergency fund came through that situation unscathed. The ones that did not have an emergency fund had real stress in their lives. So it's for certain circumstances like that, or you lose your job, something happens, and It doesn't matter what the reason is. Now you're out of a job for 3 to 6 months. Now you need to go find another job. An emergency fund is something that helps you in that process. Yeah, here's what I'm saying. Start with 10 to 15,000 Rand. Now the other question is, when should I have it? Let's say I have a lot of debt. I have credit card debt or I have things like that. Even in the midst of having a lot of other debt, have a 10 to 15,000 Rand build up on your emergency fund so that you do not have to go into additional debt if something like that happens. In South Africa, currently in Gauteng, not as much in the Cape. Potholes is quite prevalent at this stage, especially in rainy season. And if you slash a tire, a 2 or 3,000 Rand can break the bank if you don't have that available. That can even put you in a position where you're not able to get to work unless you go into credit card or secure debt. Now, once you have that 15,000 Rand build up, then the next thing is to say, okay, now we have to go for all our unsecured debt. That is credit card, anything like a clothing account or a personal loan or things like that, something that doesn't have an asset attached to it. Now, what's an asset attached to it? Like a car. If you purchase a car on a hire purchase, then they would, if you do not pay that debt, they will take back the car. So there's an asset attached to that. Another one would be your property. So excluding those type of items, the first thing we have to do is we have to get out of debt. Now, if you have a scenario where out of a 50 or let's say a 30,000 Rand salary, 10,000 Rand of that money you're paying off on debt. A lot of people, that is 30% or 33% of your income you're paying on debt. Now, imagine you can be in a position where you don't have any of that debt. So you go to your budget, go and have a look at all the debt that you have, and you ask yourself, what would my life be like if I didn't have to pay any of this debt? Would it be more stressful? Would it be less stressful? What other opportunities might I have if I do not have that debt? If we get to a position where we don't have any of that debt in this scenario of a 33% debt to income ratio, you can actually give yourself a 33% after tax raise, which your boss, most bosses, would never give you in 1 year. So you have that in control of your life. So the first thing we do, we list all our debts. Then from there on, we start paying off all the smallest type of debts. Now, we have a tool on our website, and Corin, we can help you with that as well, what we call a debt amortization, where you put in all your debt, you put in the interest rates on those debts, and you say, okay, let's tackle that debt, and we start paying it off. But as we pay off the smallest amount of debt, smallest debt balances, we take that cash flow and we put into the other debt, and you start snowballing your debt, and you get to a position where some people, we've had scenarios where people had to be were indebted for 7-8 years, and we started rolling out this plan, and within 1 year they were debt free. So there are ways and means in which we can do it, and it's very important to say you become the bank and not the bank be the bank. Now, with debt, it's like gambling. There's only one rule. In gambling, the rule is the house always wins. In debt, the rule is the bank always wins. So you can ask yourself, do you want the bank to be the bank, or do you want to be the bank? Where you have no debt, you have a great emergency fund, and from that emergency fund, you can maneuver your life. Now, again, here's what I said. You start with the small, you pay the minimums, and then you take the rest of that money and you roll it into the higher amounts so that you can erode your debt over a very short period of time. One of the biggest things is important here. Once that debt is paid off, don't take that money and use it for someone else. Take that debt and move it on to the next item on the list. This is a very interesting example. On a R1 million house, if you had a R1 million house on a 10.5% interest rate, and you go and you say, I put 1,500 Rand extra additionally into that repayment, you actually save 664,000 Rand. Now, I don't know about you, but my wife can do a lot with an extra 664,000 Rand. So this is just one of the examples. There's a few other examples. There's some debt hacks that we can talk about as well. Another one is you can go and say, I take my bond. Now remember, you don't start with this unless you've paid off all your other unsecured debt. It's no use spending money and saving on a bond where you have a 9 or a 10% interest rate, but you have credit card or overdrafts or anything where you have 20, 25% interest rate loans. So rather pay off those loans, and then you can start looking at taking your bond and settling that early. Now, let's get to the practical things of how do you actually get to a budget. A lot of people, there's Excel spreadsheets, so you can use Excel spreadsheets. You can use things like a black book, very old. You can use black book. A lot of people nowadays don't use the envelope system where you say, okay, there's an envelope and I put my allocation for my groceries in one envelope, my allocation for my fuel in another envelope, because we're moving to a cashless environment. So how do you do that? And that is where this thing can become very powerful in tracking and helping you with your banking and your budgeting. Now, before we get to that tracking of it, the thing that's very important is that when you look at your retirement, that's ultimately where you want to go. The first thing is getting out of debt, getting all your debt settled, getting your bonds settled and everything. But then you're progressing and say, okay, for the rest of my life, do I want to work for the rest of my life? Now, I don't really believe retirement is something that you go and sit on the stoop waiting to die. Retirement is actually, Robert Kiyosaki coined it as financial freedom, and that is where your assets that you have is able to give you a recurring or passive income that is enough to cover all your overheads and expenses. So the moment you have that scenario, whether it is through your investments that you might have, all other vehicles and means, might be property, might be businesses, but all those assets give you enough cash flow to get to retirement. That's when it's covered. But when you get to a retirement age and you say, okay, I've saved up some money, ideally, you want to be at about 75% of what you currently earn as a replacement towards your current lifestyle. And why 75? Because you're probably not going to have a bond, hopefully not. Hopefully, in Afrikaans, we call it the pensioenvreder. Hopefully, you're not going to have kids at home that is still at home in your pocket. The third one is you might not be driving that far to work, etc. The fourth reason is you're not going to contribute towards your retirement planning or investing money towards retirement anymore. So those four reasons and a few smaller reasons like other expenses that you might not incur over time. You're probably not going to travel that much. Your vehicles, your bonds, your everything's paid off. So therefore, a 75% replacement ratio is a good number to work on if you want to maintain your existing and current lifestyle. Now, on a budget, I know this is not really part of the budget, but I just thought it's important that we just add that. It is very important that you make sure you have a will. Stats, the PPS had some stats in 2022 of all the estates that was registered at the Master of the High Court of people passing away, only 15% were executable. That means 85% of estates weren't executable at the Pretoria Master of High Court office. So first of all, some of the reasons why people do not have a will. So it's important to have a will. The second one is they might have had minors or children under the age where some of those assets are left to the children, and then those funds go and lie in the guardian's fund. And there are other reasons like their cash in their estate weren't properly constructed and things like that, and they have to go and sell assets to do that. So the first thing is make sure you have a will. We know that about 20% of South Africans have a will currently, which is a scary statistic. The second thing is then once you have a will, make sure your will is actually executable. And that's where you talk to a financial planner to assist you with that process. But please make sure that you have this, because this doesn't matter what you do in your budget. This can influence your legacy on your cash flow and also with your family if something happens to you quite dramatically. Now, I just mentioned that to you. So it's important to make sure that you protect your assets. You have a permanent lock on your legacy, and you protect your family's future. Now, before I go to the questions, there's one thing that I added. I did some research on this. There's a few examples of really great tools out there in the market when it comes to your budgeting that you can utilize, and this might come up in the Q&A as well. The first thing that I want to quickly mention is there are programs like Vault 22. You need a budget or a few tools that actually integrates with your bank accounts. Some of them you pay for, others you don't. And then there are certain banking apps. Now, the problem with the banking apps, like I know Capital Bank has them, or Capitec. You have Discovery, FNB. The bank bringing out those products now, but a lot of them only uses if you. It's very great if you only have one bank that you're dealing with. But if you have different financial institutions, you might want to go for a tool like Unit a Budget or Vault 22 or something like that. Some of the tools are also paid for, so there's some research you can do on that. But for all intended purposes, I would definitely suggest that you start looking at some kind of a tool to help you manage your budget, because most of us do not have the time to go and sit on a Saturday and analyze those bank statements, run pivot tables, take Excel spreadsheet and write down all this stuff. And so I wanted to keep it very high level for where we're at now, but to give you guys some solid tools on what you can do with when it comes to budgeting. Corin, over to you.
Thank you very, very much, Stian. That was very informative. We do have a few questions. If I could just start with the first one. Where is the best place to save for emergencies? Is a 32-day savings account advisable, or do you ideally need it to be accessible immediately?
That is a brilliant question. I would definitely not put it in a 32-day savings account, because the moment you do that, it's not an emergency anymore, because if you slash a tire now, you want the money now. You don't want it over in 32 days' time. So a money market is a great place to start with, maybe a small savings account, but ideally you want to go to a money market. I've had people come to me and say, but can I save up in a Bitcoin account for a crypto account for emergency fund? No. It's an emergency fund. It's an insurance fund. So you don't want to actually be in a place where you outperform the market with investments. Go for a money market where you get 6-7% growth on a portfolio. APSA calls it a market link. Don't go for a call account or something that locks you in over a period of time.
Okay, the second question, is there a reliable tool to create budgeting you can recommend? I have tried the bank apps, however, there are those uncategorized, and therefore I cannot really match month to month. Where my wants, I spend much.
Yeah, and I think that in that question, what I'll do is while we on this, I'll just quickly grab. There's a slide that I can quickly grab, and I can run through that. But Vault 22, they used to be 22/7. That used to be their name. and they've rebranded to Vault 22. So that's a great one to look at. I'll quickly just find the other ones that I have here, and then I'll share that with you. But we can go on so long with the next question. I'll come back to that question while I pull it up.
Thanks, Stian. What is the platform you mentioned which puts together your debts so that you can pay them off within a short period of time?
It's actually a debt that you can go and Google debt amortization tool, but on the NMG website, on the financial planning tools portion, there is actually a tool like that you put in your numbers and you can download a schedule that can help you run that debt amortization tool. And that's free of charge, and you don't have to put in your details. If you don't want to talk to us, it's not a tool where we go and say, okay, we want to get you information that we can sell. It's not, we don't want to sell, we want to equip.
Super. There is a question about sharing the recording. I can tell you that after the session, we will definitely be sharing the recording with you. The next question, what do I do if I don't have a financial planner? Should I have one?
I think every single person should have a financial planner, and not just someone once a year going and have a look at you and discussing what insurance to sell you. That's not a financial planner, that's a broker. That's just an insurance broker that's trying to sell you insurance. If you don't have someone that sits with you and help you with your budget, help you with your guidelines and say, what's your goals for the year? Where do you want to go for this year, for next year, for the next 5, 10 years? Look at your estate planning and things like that. Then don't just have someone that say they're a financial planner or a financial advisor, but the only thing they do is every year sit with you and say, okay, how much insurance do you need? And look at your life insurance, look at your retirement annuity. That's not a financial planner. You have to have someone that holistically looks at your financial planning, looks at your estate planning, say, do you have a will? Look at your budget and help you with your cash flows and your debt and help you devise a plan to do that with.
That's great advice. Would it be better to save in an investment vehicle that gives a return of 13% or paying additional funds into your bond saving 9.85%?
I would definitely look at doing it's a bit of a loaded question. Why I'm saying this, it depends what your personality is like. I've had scenarios where people are very impulsive and they put money in their bond as an emergency fund, and then they see the next bling thing and they take that money and they go and buy that. So you have to be honest with yourself as an individual and say, what are you like? And how can I protect myself from myself sometimes? What some people do is they say, okay, I'm going to talk to a financial planner and create an emergency fund in a money market, or what we call a fixed income fund, where you get inflation plus 1 or 2% above inflation in an investment, in a unit trust, where you have 48 to 72 hours access to get that money. So for them, it's a long enough time to be able to have that notice and access to that portfolio. So ideally, a bond is a great tool to save it in once your debt is paid off, but then you must be honest with yourself and say, will I access that, or will I be self-disciplined enough to say, no, I'm not going to touch it?
Okay. Next question, really keen to know which tools, app you would recommend for budgeting.
I'm just looking for that now. I have it. I actually, I'll give it to you now. I'm actually searching for it now. So I'll get back. It's the same question as the previous one.
What are the best options for saving for retirement and emergencies in terms of tax?
Emergencies, tax-wise, a bond is actually the best, or even a money market is a great example, because you get 23,800 Rand interest exemption every year on and you need about 500,000 Rand in a portfolio like that before you get to a place where you're really going to start paying tax on that money. So that's the first one. The second one, the best option for retirement, is a pension or provident fund if you have that at work, because the tax benefit of it. If you're on depend on your tax rate, but if you're on a 45% tax rate of every 100 Rand that you put in, actually SARS gives you back 45% of that money as a rebate every year. So there's no other investment that'll give you that type of return. And then also the other thing that a lot of people don't realize is retirement annuities, pension and provident funds are all protected and against debtors, and no one can touch that money if something has to happen to you and you had to sequestrate yourself or something like that.
Yeah, I think you've actually answered the next question. I'll just quickly read it though. What about putting savings for emergencies, funds into an access bond, and then drawing from there if you need it, and leaving it if you don't? So I think you've addressed that one.
I think we've accessed that, yes.
On the 32 days savings account, this is the best interest rate for the shortest notice and often matches inflation at least. Most credit cards are 52 days credit free. Having credit available for at least a month's expenses should allow for the immediate access until the 32-day deposit is released while still earning some proper interest on the savings while it is building up. This is my approach right now. Should I still not use the 32 days deposit account?
I'm not a fan of a 32-day deposit account, depending on how much money you're talking about. If you have that, I would rather put it into a fixed income unit trust portfolio, where it's a combination of bonds and cash, money market. You get about 1 or 2% above inflation on a portfolio like that. So I would rather, because a 32-day account, what happens is as the interest rates go down, your interest actually decreases on that every year.
Okay. But there is another person looking for the platform on the financial planning. They can't find it. So if we can...
What I do is, what we can do is, Corin, if they send you, so I'm trying to multitask here and finding that information.
No problem.
So I can get that. If they send us an email, we can send them the link with that. They can either send it email to you or to me. We could just pop it in the chat, and then we can go from there.
I think, Stian, what we'll do is that when we do send the copy of the recording, we will.
Cool. That's a great idea.
We will include the links in that communication.
Cool. Okay. Here's the app. Sorry, Corin. Let me just quickly go back to those apps that we spoke about. So, what I'm just going to read it. I actually have it here. It's Vault 22 is the one that we spoke about. The other one that's also very strong South African support is FinWise, FINWISE. So it uses AI and smart categorization to help you with the process. And then there's another one called Astute Money. Now, FinWise is subscription based. I think it's $85 a month. And sometimes you have to ask yourself, isn't it worthwhile rather paying for something like that? Is it and of all the user experiences, FinWise was the best for me. And then it also has a really good rating in terms of Google ratings, and it's very modern, clean, intuitive. And then you have the bank integration solutions as FNB and Nedbank and Capitec. They have the best ones. But again, I'm not a real fan of them. And the reason why is, most of the banks do this, they put that in place because they want to sell you something else. So there's nothing like a free lunch. You need to ask yourself, why would someone give something away for free? And sometimes it is very noble, most of the times not really. And then internationally, some international apps is you need a budget. That's actually WN or YNAB. That's the app. University is an international renowned speaker on budgeting and debt and stuff like that. And then Every Dollar is another one that you can look at. So those are the international apps that you can look at. But I think out of a South African perspective, the FinWise option I'm not going to promote everyone, but if I had to choose one, I would go for the FinWise option.
Great. Is saving in an endowment also good?
No. Again, depending where you're at. I'm going to explain why. An endowment, you're locked in for 5 years. That's the first thing. The second thing is people say, yes, but the money I get out of endowment is tax-free. But what is not told to a lot of people is that inside of an endowment, you pay 30% tax on the growth of your endowment. So if you had money in a unit trust portfolio, in an endowment, you would see 30% less growth on the endowment than on the unit trust portfolio because of that fact. So it has a place in the market, and I would approach it is the first thing is make sure you have an emergency fund in a money market, have some money in a money market. Then once you've done that, pay off your bond. And pay off your bond, but also have a retirement annuity. Now, people are saying, yeah, but retirement annuities, they're not that great and everything. The rules have changed around retirement annuities in 2008. And the costs have come down dramatically, and you do not have to be locked in a retirement annuity. But this is now, again, building cash flow for the long run. Then, so I would have an emergency fund, money market, get it up to 500,000 Rand. Then I would look at my retirement annuities. Once I've maxed that out, I would look at tax-free investments. We know SARS has just increased the tax-free investment contributions every year to 43,000 Rand a year from 36,000. So that would be my third option. And once you've done that, then you look at endowment. I'm very vocal about it. Unfortunately, a lot of brokers, because if you walk away from them, your broker, just sell you an endowment because they get more commission on it. Because it's a fixed term and there's commission on that term. And I'm not a fan of that.
Can we speak to someone at NMG directly to help us with our financial planning and debt management?
Absolutely. We have two teams. The one is what we call benefit counselors. So they are graduates and they are working all on a salary, and they can help with the basics of it. But if you want to talk to someone a little bit more senior, we have a national team that sits nationally and are financial planners. And the goal with our financial planners is not to sell you something. Yes, they do make money if they sell something, but we're very, very strict on it to say, we first look at it, almost want to go and say like a doctor. We first look at diagnosis. We don't go to a pharmacy first and go and find medicine. If you don't know what's wrong with you, there's no use going to a pharmacy and just getting medicine. The wrong medicine might kill you. If you get the wrong product for your financial circumstances, it can kill your financial future.
I am currently getting around 5,000 Rand in monthly interest on my savings. What is the tax implication?
Sorry. 5,000 Rand. That puts you on 60. Sorry, I just want to. Sorry, I have something in my throat now. Let me just grab some water. Sorry, 5,000 Rand. That's 60,000 Rand a year on tax. The 23,500 or 23,800 is tax free. So you're going to be taxed on 26,200 Rand. That's going to be added to your additional tax. So if you wonder why SARS might come to you and say, you owe us additional tax, it might be because of that. If you don't offset that against maybe your medical aid or additional contributions on retirement planning or stuff like that, then you're in trouble. So I would be very hesitant. There are other options of putting that in play that you don't have to pay that tax.
If I have investment properties, should I pay up those bonds as well as rather take advantage of the interest deductions, or rather take advantage of the interest deduction?
If you're not in retirement, okay, two things. First of all, an asset is only an asset if it brings in positive cash flow. So it's a fine line. You don't want to pay in on your properties every year because then you're in a negative spiral. So be in a place where you, sorry, have at least a break even, but don't pay off that bond because that interest that you get as a deduction on your tax, especially if it's in your personal capacity, actually helps you with your tax. If you don't have that, then SARS is going to hit you on that rental income as tax. So it's important. So that individual, I think it's very important to sit with a proper financial planner that can help you with tax planning around that as well. And a lot of people say to me, yeah, but I have an accountant, I have a tax practitioner. And I've seen this a lot of times where I always say a tax accountant always looks at the past. We look at the future, and the two combined is a powerful team. Because I get people that come to me and say, Stian, but you've showed me these tax hacks and tax loops of what we can do. Why didn't my accountant tell this to me? I said, but that's not their job. Their job is to comply, to help with your compliance and make sure you don't fall into a trap of SARS knocking at your door and saying, oh, we're going to arrest you and put you in prison because you didn't pay your taxes. But you have to have the combination of a team. And that's especially with someone that is earning additional income more than just their normal salary.
It says here, I'm currently going through debt review. Can I use the same technique by paying off smaller debts first, or should I get out of debt review completely?
That's a great question. Debt review is, in my opinion, very dangerous because it locks you in. And the amount of fees you're paying on that is very, very, very high. I would seriously talk to a financial planner to see how we can get you out of debt review. Also, in NMG, we have a great program called Salary Saver, because a lot of times some of that debt might be prescribed debt, or there might be reckless lending on that debt where the team can help you to get out of that situation. So I'm not a fan of debt being under debt review because of the fact that it locks you in, and you might be in that for the next 10, 15 years.
Okay, there are a couple of repeat questions. Again, can we speak to someone at NMG directly? Yes, of course, and we'll put that information in the communication to you after the session. Just want to see, how does money market work? How to start?
Okay, the best way is to go to your bank. Most banks have a money market or something similar. Please don't let someone force you into something with a call account or something like that. You need something with access to that portfolio. Some money markets have a minimum of, let's say, 20,000 Rand. Options are, there's a few options. The first one is start with a savings account. The other option is, we in NMG Financial Planning, if you can save 500 Rand or 1,000 Rand a month, we can put you in a unit trust savings account. That is a money market savings account that can help you in that process of forced savings to get you to a place where you have your kitty built up.
Super. And I think the last question is, and quite an important one actually, is how much should a person earn to realistically afford a financial planner?
How long is a piece of string? If you earn a salary, I think it's important to have a financial planner. They are, like in our team, we have very senior financial planners, but we have junior financial planners. So based on where you are in your life cycle and what you earn, I want to say 10,000 Rand plus. It's important to have a financial planner. You might not remember, and a financial plan needs to be appropriate to your circumstances and your situation. Let's use an example. If you have a pension or provident fund at work, but you need a budget, you need someone to help you with your will and help you with getting out of debt and help you have additional savings or pay your house off earlier, that is a financial plan. And a financial plan with someone, what we call a family office, let's use a guy like Patrice Motsepe, He also has a financial planner with a financial plan, but it's on a much higher level because his needs are a little bit different. So that's important that you get to a financial planner that can give you financial advice based on your appropriate circumstances.
Super. Stian, thank you very much. I think it's been a very insightful session. I do want to just to let the listeners know, if you do want to get in touch with us, please go to our website and you go to a section called Get in Touch for members, and you will be helped by our member support team. But certainly, as I mentioned, we will be sharing this recording with you, and of course include links to the various tools that Stian mentioned earlier. Thank you to everyone that joined us. We look forward to hosting you again in the next quarter, and all the best for an awesome week ahead. Thank you again. Keep well.